Good morning. This morning, can we discuss how to invest in the stock market? If you have 401k with your employer, that's good. It is a good idea that beside that, you have a brokerage account or a Roth IRA. I really suggest you open both. You can open it with Charles Schwab or TD Ameritrade. I have both. I have accounts with both firms, but I like Charles Schwab better. And it's easier for me to navigate through their website and find what I'm looking for. So if you are looking to invest, to create any brokerage account or Roth IRA or IRA, you might want to check Charles Schwab and see if you like their site. I'll put the link down in the description. So, and well, let's say that you open your Roth IRA. In fact, you can open Roth IRA and brokerage accounts with Charles Schwab. They usually require $1,000 initial deposit, but they don't enforce it. So you can open the account and then transfer $100. That's how I did it. And then I went to a branch, one of their branches in a city near us, to ask them about that, and they say yeah, they have that requirement, but they don't enforce it. So yes, you can invest and just start it as low as $100 or less, whatever you can. You can put in and start trading stocks. So you can invest in stock or mutual fund with them as well. So try to have a brokerage account and a Roth. With the Roth, the good things with Roth is you don't pay interest, you don't pay tax on the interest that you generate on your stocks when you invest in the Roth IRA. So when you retire, you can get your investment and your return tax free. And so that's good things. So we'll talk about Roth IRA another time, but I will suggest you trade stocks within your Roth IRA until you max the maximum you should invest in your Roth before you start investing in a brokerage account. And the reason I'm saying that is if you trade the stock a lot throughout the year in your brokerage account, you will be sent a lot of file, or you have to download those 1099 and file tax with them. So if you don't do your own taxes, you don't prepare your own taxes, and you have to go to the professional to do it for you, you might end up paying more to file, to get those data into your tax form, on your tax form. So just keep that in mind. In the past, my husband have traded quite a bit in his brokerage account in 1 year, and I told him that yeah, it's better he does that in his Roth IRA so that I don't have to, because I prepare our taxes, and that way I won't have to look for each one of those transactions and record the gain on our form schedules. So just keep that in mind. But today we want to talk about those stocks you can invest in, but you have to ask yourself few questions first. The first one would be, do you want to invest in this stock for the long term or for the short term? So we might discuss the short term in another video. If you want to invest in this stock, in a specific stock for the long term, then your choice, the way you choose that stock will be different than if you want to invest in the stock for the short term. So let's assume you want to invest in some stocks for the long term. Those are the stocks you will keep in your portfolio. They are your staples, the staples of your portfolio. So how do you choose those stocks? First, ask yourself, products around your house that you use and you like, or products that even in a recession people will use, or even better, products that people like to use. Even in a recession, it will be hard for them to give up using those products. And list companies that produce those products. You might talk about Clorox, for example. Clorox is, I think, is used quite a bit in the medical field, and people use bleach a lot in their houses. So you can list Clorox down as a company. What about Johnson and Johnson? You know, they have they produce they have a lot of products for babies, including and some other. I think they are in the pharmaceutical business as well. So Johnson and Johnson is one we can list down. What about Tyson? There is many meat products that we use that are produced by Tyson, right? So why not putting Tyson down? And what about Kellogg? If you eat cereals, you might want to ask yourself which brand produce those cereals. If that's Kellogg, yeah, well, why not putting it down? And what about Ford, GE, GM? I mean, Google, for example. Google is going to be around for a while, right? What about Amazon? What about Apple? Do you use Apple computer or iPad or iPad? Do you think people will be using that for a while? People like those products? Well, you put it on your list. Apple. And what else can we find? Pfizer. I think they are in the pharmaceutical. And Abbott. Abbott, they produce a vaccine, am I right? So list those companies that just come to you, you know. You don't have to Google them a lot before you can remember those companies that you have come across quite a bit. So list them all down, and you might prefer some more than others. And 3M is one of those. I have seen a lot of product with 3M on it, a lot. So yeah, Verizon, AT&T, you know. So those are just few examples to list down. So your next step will be, well, now that you have those stocks that you list down, create a spreadsheet. And now you can Google them if you have a brokerage account with a brokerage firm like Chester, for example. You can just go online on their website and research those companies that you just thought about. So have a spreadsheet, have a date, a column for the dates, have a column for those companies' names. Google the symbols and write them down as well. And go to your brokerage account firm or Google and research each one of them. So on your spreadsheet that day, record the price of their share. The price, have a column for that, a column for their 52 weeks low and the 52 weeks high. So the 52 weeks price range, have that recorded as well. They pay dividends, so have a column for dividend amount paid and dividend percentage as well. Have a column, 2 columns for that, for those things. And what else can we record again? Yeah, well, I think that's the main things. But then if you have other things in your mind, you can list it down. You can even have a column for the industries or the sectors they belong to. And now that you have all the lists, highlight the one that pay dividend. Highlight them down, highlight them, because you want to invest for the long term. You want your money, while you're sitting there hoping that the stock will go up, you want your money to be generating cash flow for you. So invest. If you are investing for the long term, that's the key. You want to invest in dividend stocks. And your process, first you choose those companies that you are familiar with. You know them, or you know quite a bit about their product, and you know that they will be around for a while. Even in a recession, people will use them, will use their product. You know those companies, you list them down. So you want to find out whether or not they pay dividends. So highlight the one that pay dividends. And now that you highlight them, select the one that are close to their low price range, because you have a column for price range. So you want to select, you can just deselect or use another color and highlight the one that are close amount, the one that pay dividend. You want to find out which ones are closer to their low, 52 weeks range to their low than their high. And you can just see the price range for the low and high and see which one is on closer to their low, they pass their high, the middle between their low and high, they are more close to their low than their high. So just have that middle in mind, and anything that fall behind it should be in your selection. So you have the one that pay dividend, the one that are closer to their low. Now your next things to look at is the one that costs more, that costs less than or up to $20 a share. So you select those as well and choose the one that is about the few that you will be left with. Choose the one that is closer to its lowest 52 weeks range. Does that make sense? So you choose, out of your list, you selected the one that pay dividends, and then you deselect the one that too close to their high, to their 52 weeks range, that too close to their highest price. For that session, you are comparing the current price though. On the day you are doing those things, you are doing those analysis, the price on that date, you want to compare that to their 52 weeks range, low and high. So if that price is too close to the high, you don't want to invest in a stock when it's on the highest, when it's selling for the highest price. You want to invest low so that quickly you can make money on it. So you want to invest low and sell high. So if the stock is selling at a higher price now, you don't want to invest in it. If you like the stock, keep an eye on it. When it goes down, you purchase it. So you want to select the one that are close to their 52 weeks low when you compare the price to the 52 weeks range. And you want to select, or you want to deselect the one that are too expensive and be left with the one that are within $20 price range, for a share on that day that you are doing those analysis. And if you have more than one, then choose the one that is the closest to its 52 weeks low, and that's the one you will invest in. That's how I select my stocks when I'm doing this analysis, to see which one I want to invest in. So when I trade stocks and I have some money and I want to invest in a staple, something that I want to keep in my portfolio for a while, I like to go through that to see which stock is close to his 52 weeks low, and make sure that it's paying dividends. And that's what I will choose, because if I want to keep the stock in my portfolio for a while, I want that to be generating cash flow for me. And the target for the dividends is anything that pay over 3% is good. I like it when it's more than 4% dividends, annual dividend rates, right? Yeah, so I like to go by the rate more than the dividend amount. So that gives me an idea so that I can compare it to the others. So if it's 4% and high, I like it. Even 2%, if the company is a good company, yeah, I will go for it as well. And I have invested in other stocks that are lower than that, but it's just because I like the stock. But if the dividend is high, that's number one in my list. And there are few that will pay you a high dividends on your investment. So some of them, I think Ford, we can check Ford, Verizon, AT&T, and those companies pay higher dividend compared to the tech. So you can compare those things. And when you have money you want to invest in your Roth IRA, and you want to invest in a stock that you don't want to trade, you want to keep for a while, make sure those stocks pay you dividend, if not high dividend, and buy them on their lowest price so that quickly you can start making a profit on them. Now let me show you my brokerage account here. I think that will be my Roth, so that you see how it looks like. I have both Roth IRA and brokerage account with just Schwab, and I have my Charles Schwab account open here. And as you can see, even though, let's talk about how things are displayed here. On the far left, you have the companies here. You have the quantity invested in them. You have the price they are selling currently, or they closed last night. And we have the price change here. I don't care much for that, but the market value. So that's how, if you sell it now, that's what you are most likely to gain from the sale. And we have the day change. I don't pay much attention to that, but you have the cost basis. That's how much you end up paying based on, look, when you purchase it plus the commission you pay. And by the way, Charles Schwab used to charge $9 something for commission when you trade stock, and this year 2019 they changed it, they decreased it to $4 something, and until recently they canceled it completely, so you can trade stock for free, which is very interesting. I have traded with them when they were charging $9, when they charged $4, but recently when they decreased it to $0, I have not traded anything too recently because we are trying to pay off our house, so we stop investing much. And the only time we invest is when we make quite a bit of money on a stock. We have a gain. My husband and I, he has an account, I have mine too, so we will just sell that stock so that we can invest in something else. So we don't take money out of the account, we sell to lock in our gains and reinvest in something else. So other than that, we don't generally invest more into, unless we save our own allowances we want to invest, that's fine. Other than that, we just want to focus on paying off our debt first, and then we will have more free income to invest. But while we have invested already, we just kept it in the account and we use it. So this is my Roth IRA with Charles Schwab, and you can see a lot of red here. And one thing that I do is when I lose money in a stock, I don't sell it, I just keep it. I buy low, but when it goes even lower and I lose money, I just don't sell it. And there are chances that the top 4, there are chances that they will go back up. So it's just, being patient and just wait on those stocks to go back up. The one at the bottom are the one that there is a high probability that I lost that money. So if you cannot lose a money, you shouldn't be investing in the stock, because when you invest in the stock market, there is a risk to lose the money and there is a risk to gain more. So you cannot gain more if you don't risk, but you have to know your risk tolerance to see if you should be doing this or not. So even though I lost quite a bit in this session, I have gained more in the past. So we are going to talk about those stocks later, but we are more focusing on those one here. I have General Mills. I don't know if it was a good buy though. It's getting better. It has been down quite a bit after I purchased it. So let's see Ford, for example. So when you are looking for those stocks and you go online to look for more information, let's click on it. For example, here and is in the automobile sector. You look at the graph here, and on the far right you'll see the 52 weeks range as well. So you can see that we have 52 weeks range here. So that means it's sold at $7.41 at one time, and the highest is 10.56. Now it's selling at $9.45. So if you want to purchase stocks and you like Ford, I don't think that's the right time to purchase it, because it's too close to the highest price than it is to the lowest. So between 7 and 10, the middle is, you have $3 difference right there. So that's divided by 2 is 150. So 750, 850. So you are somewhere. So 850. So yeah, you will be anything above 850 is closer to the highest range than to the lowest. That's how you compare if that's the good price to buy or not. So that's that. And another thing you can do is click on the chart right here to look at the trend. So you can see how it fluctuated. It will tell you if that's something you want to keep for the long term, or when it goes up, it's better you sell it, because at one point it was 35, and at another point it was even lower than $5. So if you purchase it in 1980, when it was lower than $5, and you kept it in your account when it went to 35, you didn't sell it, you kept it in the account until it went down to 5 or below 5 in 2009, and you sold it, well, you won't make much profit. At least you'll have gained something from the dividend that will have generated throughout those years though, but the value on the stock won't be that much high. So keep that in mind if you want to keep a stock in your portfolio for a long period of time, because it goes up, it goes down, it goes up, it goes down. So when it goes up and you have a gain, when you don't sell it, that gain is not realized. So when it goes down and you way down compared to the price you pay for, and you have a loss, that loss is not realized unless you sold it. So when you are keeping the stock in your portfolio for a long period of time, have a plan, the reason why you want to keep it. If you want to keep it so that it keep reinvesting the dividend, that's fine. But if you want to make profits on those gains, it's good you sell it to lock in that gain, and then take that money again and reinvest in another stock on their lowest price, until this stock that you like so much goes down again for you to invest back in. So you can lock in all those different gains at different stage of the timeline here, so that you don't miss them, if I will say like that. So let's go back a little bit to the page you were before and see what the dividend is. As you can see, the dividend is 15 cents and the dividend rate is CC. Yeah, what they pay for the whole year is 60 cents or 6.34%. That's a lot. So Ford pays 6.34%. So if you invest in them, well, every quarter for the whole year you'll be earning 6.34% on your return compared to 0.1% on your saving account at the bank. So that's how it's important to invest in the stock market, and to invest, if you are going to invest for the long term, to choose those stocks that pay high dividends so that your money is not just sitting there doing nothing. So if we go back and choose, we go to research, let's select one. For example, why not trying Verizon? I believe Verizon is VZ. Let's see Verizon pay dividend. So you can see Verizon here. Verizon has been low, now it's going up. So you can see the price range, $52.28 to $62.22, and it's selling now at 61.29. So it's close to the highest range than to the lowest range. So I don't think that's, in my personal opinion, I don't think that's the right time for me to invest in Verizon. It's so close to the highest range. So if that's something that goes up and down, if I invest in now and it goes down, then I have to wait for a while for that to go up again before I'll be able to sell it if I want to sell it. So let's check the dividend. And here the dollar amount is 62 cents on a share every quarter, or $2.46 a year, 4.01% annual return, annual dividends. So that's a good return right there as well to work with. And you can see when they will pay the next one and so forth. So that's how you look for, you search those companies to see if that's something you want to invest in or not. So some of them will have high return, some of them will have low return, low dividend payment. And as you can see, the rising here from 84 to 2018, you will see that here it has been going up, constantly. I mean, it has not gone back down as low as at the beginning here. Even though it went down here, that's a company you can believe in some way. It has gone up quite a bit here, but then went down. So if you have invested around this time frame, then you'll have lost money around this time. And if you didn't sell it, then you'll have recovered. But if you have invested from the beginning here, then you'll have made a lot of money whether you sold it or not, especially if you didn't sell it. So that's how you look at their chart to see if the stock has gone up throughout the year. And I expect to see up and down, up or down. But if you have seen it going down, way down, all the way to how it started, then chances that it's not a stock you want to keep in your portfolio for a long period of time. It's just better when it goes up, you sell it, and when it goes down, you buy it. You buy it. So let's check if I have GIS as well. So if we go back to our account here, let's select GIS. And GIS has been 37 at one point and 56 at one point. Now it's 52. So it's now the best time to purchase it either. But you can see the chart here, and let's check the dividend here. The dividend is 49 cents on a share, or $1.96 for the whole year, or 3.70%, which is okay. But while is losing losing money in my portfolio because it went down from the time I purchased it. At least I'm generating some revenue on it because I don't want to sell it when it's low. I'll lose money. Really, I will realize that loss, and I don't want to do that. So while it's sitting there, at least it's paying me dividend. So that's what you should be looking for. And when we go to the chart here, let's see if it was a good idea to have GIS for the long term in our portfolio. Well, you will think so, right? Because have you seen the graph here? It has been constantly up. So for somebody that will have purchased it in 1980, well, and kept it, will have made a lot of money on it. So for that reason, by looking at this chart, I'm now worried that I lost money, I have unrealized loss on it at the moment, because chances are I thought I was purchasing it on the low when I purchased it, but then it went even down after that, and it's trying to recover now. So I can consider GIS as a staple of my portfolio because of the shape of the chart. I can just leave it there. Even after it's gone up, I can just leave it there instead of trying to sell it to lock in that gain. So that's one way of looking at it as well. So let's go back again and try I believe I have GE. Let's try GE. And we have GE here. GE, I lost $98. And by the way, when we came back for GIS, I purchased it at $57 a share, but that includes the commission that I pay on it as well. So just would like to combine both and divide by the number of shares. And you can see that it's been generating a lot of because I chose to reinvest the dividend. Is been buying more share with whatever amount they could buy with the dividend that I earned on it. The same thing is been going on with Ford. This video is going to be a little bit long if you don't mind, but at the end I like to show you how I track those stocks that I purchased on a spreadsheet. So I believe I didn't purchase 109 share of Ford, but by investing in a stock that generates dividends, and I try to purchase enough that the goal was that each time they pay me dividend, I'll be able to purchase one share of Ford with it. So that's why it gone up. But really check to see if I have a good record. That will show me how many total I purchased to start with. I didn't purchase it all just at one time. So let's check out GE here. And GE has dividend going on there as well. So you can see GE here from being up and then going down, and you can see the 652 risk price range is $6.51 to 11.84, and well, within 52 weeks. But now it's selling at 11.23, so it's not the right time to purchase it, because if it goes down again, you'll lose money. So, but at one point it has traded for $30 though, and in October 2000, close to the end of 2019, it went down to $6.40 here. So that's when it hit that 52 weeks low range. So if we go to, or let's check the dividends here first. Well, it's paying a penny on a share, or 4 cents the whole year, and the dividend is 0.36%. That's very low. So the only reason why somebody like me will have this stock in his portfolio should be that is going up, or it'll go up quickly, so that when I have $100 profit, I can just sell and move out of there. Is a very good company that will continue increasing in value. Other than that, I don't really see the point of keeping it there. So let's see how the chart is throughout the year. Well, by looking at the charts like this without doing much of analysis, I will say that that's a stock that when you buy it, it goes up, you sell it, you make a profit, and you lock in that gain. Then you take that money, you invest it in another stock on their lowest price, on its lowest price. And when this one, if you like it, it goes down again, you can reinvest in it. So you don't get out of the stock market, you just invest your money in another stock until this stock that you like so much goes down again, and then you invest. So if you purchase it around 2080, and 2008 is at this low, you know, you of course you make money, but is for that time frame that you have held on to, if it's paying you 0.36% dividend, I don't think you make that much money at all. But if you purchase it when it was on the highest, and it went down later, if you purchase it around 98 when it was on the highest, at their peak, and then it went down right after that in 2000 or even 2008, you know, you see, you'll have lost money. So that's a stock. By doing up and down this wide, is a good idea to sell it when you make a profit on it. You can have a price range. If that's $100 you want, or $50, when you have a gain of $50, you just sell and get your money out of that stock and invest in something else. And if you check it later again and it's low when you compare it to its 52 weeks price range, then you invest back in it again, and when it goes up again, you can make some money, you sell it, and you get out of it. So it's not a stock that you want to keep in your portfolio as a staple, because it does fluctuate quite a bit. So that's what this is about. Choose a stock that, if you want to have it in your portfolio as a staple for a long period of time, you want a stock that pay you high dividends. You want a stock that has a chart that is going up constantly, even if that doesn't fluctuate this wide, like up and down like this. And if the stock is below $20, it's trading for less than $20, that allows you to invest more of your money in it, so that every time they pay you dividends, you'll be able to buy more share of it. and you can see that Ford is selling at $9. GIS is selling for $52 and GE is $11. I think the reason I must have chosen GE because it's $11. Well, if you choose GE as $11, we could buy more share of it, and if it goes up a little bit, you can sell it. But you are not making a lot from the dividend here. But if you compare Ford with 6%, I believe, yeah, you'll be able to make quite a bit in the dividend, in a way that each one of those dividends could easily, depending on the amount of share you have, could easily purchase another share of stock for you. So if we go to my spreadsheet here, is okay. When you start investing, it's good idea to track your purchases and sell on a spreadsheet. And if I show you one here, you'll have a spreadsheet to record the date you make the purchase, and you'll have the name of the company, the symbol, the price you pay, the commission, if any, the number of shares you pay, and when you sell it. And when you have a spreadsheet, you can use a journal, a paper, or a binder. Leave a row right below the stock you purchase so that you can record the sell. When you sell it, you need to go back to the row where you purchase the stock, and the row below it you record the sell, so that you can track your purchase and your sell. Even though you will sell a month later, you want to track them together. That way you'll know if you made a profit or not. So let's see. And if you purchase the stock at different time frame, you will be able to track them together as well. I'm trying to locate Ford here, and I don't know if you'll be able to see it. But if I select those here, that's my Ford right there. So I have purchased them at different time frame, and you will see the amount that I pay for the price they sold it for. I've been purchased it at $11 at one point, might be the first time, and then $9, and then $9.45 and $8. So when it kept going down, I kept purchasing more and more, because I want to reach a certain number so that each time they pay me dividend, and I'll be able to buy another share of it easily by reinvesting in it. And then those are the number of shares that I purchased. That's the commission that I pay. You can see it was $4.95, and that's the total cost right there. So when I sell it, I'll have a row right underneath it. I'll just insert a row here to record my sell, so that I can calculate the difference between the cost and the sell to see if I have a profit or not. So you'll see this row here. You'll see this row here where I have profits recorded. So let's see Ford, the number of shares that I purchased. I purchased 99 shares, and now I have 109 shares. So that means I gained 10 shares by investing in Ford from 2017 to 2019. I think the first one was July 2017, and then I purchased it in 18 and 19. So that's how you track those. And I have Tyson here. You'll see that I bought it in 2017 and I sold it in 2017, and I made $185 profit on it. So that's how you track those investments on your spreadsheet to see if you are making profits or not. And you can have the original spreadsheet that I talked to you about, where you record the symbol, the companies, the price, the high, the low, the dividend, the annual dividend or the dividend rates, and the sector. That way you keep adding to this spreadsheet. When you come up you come across a stock that you like, so that when you want to make purchases, you have enough money in the account you want to invest in the stock, you can see which one you should go for this time. Thank you for watching. I'm Nina from Nina's Soap.